Hey, hello everyone. I think I'm live here. Welcome to this market review for today, Monday, 21 of October 2024. So just a quick reminder of what I do here. My objective is to show you how I think and how I select my trades. I'm attempting to pass 2 million prop firm challenge using many accounts all connected together. A quick reminder of my strategy because I have not presented it to you yet. So the main idea is that I'm waiting for price to go down to a certain retracement level. Okay, I like using this range. It can be a bit less, it can be a bit more, but the idea is that when price goes up, it never goes up in a straight line. Therefore, it goes up, a bit down, but higher, and then continues. And this is the best way to enter the trend. So how do I do that? I'm waiting for the retracement in this range, the blue range you see there. I'm waiting for an inversion pattern to be formed. It can be an inversion fair value gap or break of structure. And then I enter, for example, here long, reaching the previous high. Okay, here the reward to risk ratio is always, most of the time, greater than 2, sometimes 3 or more. That's the kind of reward to risk ratio I target. When the trend is up, but I want to go short, I'm looking exactly the same thing, but I'm looking for a reversal pattern at the top. Okay, so it needs to be a higher high. I didn't represent it there, but it can be in a longer time frame, fair value gap or something that happens before. Okay, reaction to some price here, an inversion, and then targeting the Fibonacci retracement level here, 61.8%. Okay, this is known for those of you guys who like and listen to ICT. It's like the OTE, the optimal trade entry. Okay, so I'm targeting this level. Maybe we go lower, but if I'm right and the trend is going to go down until it bounces there to continue to go up because the trend is up, this would be a good target for me. The reason why I'm risking less here is because I'm trading contrary to the trend. Here, I believe the trend is up. So when I short in an uptrend, I take a lower risk. So to sum up that, let's imagine like we make a new high, but we don't retrace enough. For me, this is not a good entry because I really expect to get into my retracement level. Okay, like much deeper into the trend. Okay. So of course, as you see here, the blue range here is updated each time I reach a new high, because the Fibonacci range starts at the bottom here and is updated anytime I get a higher high. Okay, so that's my that's what I say here, and the exact same thing happens when I'm doing shorts. So when the trend is down, I'm waiting for price to go back up into the Fibonacci range. Okay, and then I short it to the previous low. Same thing here when I want to be long into a downtrend. I only risk 25 basis points, and I'm reaching and I'm targeting the Fibonacci range. Okay, that's the idea. And exactly as I said, if price retraces but doesn't retrace enough to get into the somewhere near this range, okay, and don't consider it as a valid entry. So that's main idea of my strategy. So once this is done, let's review my previous trades. So here we can see that I'm down compared to yesterday, down 45 basis points. That's because my entry on AUDUSD was closed. So let's review the trade together. It was AUDUSD, so this trade. Okay. So exactly as I told you, here is what I believe. Price starts somewhere. Okay. Usually I don't take the wicks, I only take the bodies, but this can be adjusted. Doesn't change much the range. Here we made a new high, low, high. Okay. So the idea would be to wait for price to retrace over there, okay, and to enter long. So that's what I did. I entered long a bit late, maybe. I should have entered exactly there once I had my inversion pattern here. So just to remind you, I'm only working in the 4-hour time frame. Okay. So yeah, that's a lot of accounts for those following. Yeah, so I have 9 accounts enabled for a total 2 million. Yeah, I'm trying to do big things. Here, we'll see how it goes. And what I said is that so we retraced really deep into the Fibonacci range here, and it seems that my entry was just a failed. So there was something, so just a loss. So I took the loss, and that's exactly the trade I have here. So this is my 100K account. As I told you, I was risking 0.5%. I was in the trend. So that's $500, and that's exactly what I lost here. Okay, so no surprise here. So I still have my NASDAQ trade open. So let's review that. My NASDAQ trade, so it was opened on Friday because I saw this massive candle down here. Nice rejection from this fair value gap. And I see that I'm somewhere in an interesting zone on the 4-hour time frame inside, again, this massive previous fair value gap. So once again, we are way above my Fibonacci retracement levels. Okay, we are really deep into this level, but I decided to take the trend, to take the trade no matter what. So what am I targeting? So here we went from this high to this low, fine. We went up. So this is not completely mechanical because I'm trying to translate that into my backtest technology. Not completely mechanical yet, but I'm planning to work on that. That's the idea. For now, you had the macro, macro view on the strategy. I still have to work on making that mechanical. So here I reached my low. I went for the highs here, and you can see that here we retrace back exactly at the 70% retracement level. But then when we went down, we didn't make a new low as expected if we were in a downtrend. But we bounced back this specific here zone, again the 70% retracement level, which coincides here with fair value gap. So this is definitely a nice entry. Okay, so here the trend seems to turn into an uptrend. So let's go. We make a new high, and what happens here? So it's possible we go up, completely blasting the previous high. That's a possibility. or we bounce back again this huge fair value gap or order block, you call that whatever you want, and we go down. So if you look precisely, my target is here, this nice untouched fair value gap, right into the 70% retracement level. So I expect price to do something like in the orange line here, okay? Having some resistance maybe here, but definitely reaching this level before maybe going for new highs. Just like my view, that's completely fine. I might be wrong. As a reminder, as I told you here, I only risked 0.5%, 0.25% because I'm shorting something that's going up. Okay, so that's my view. So nothing really happened today in the session. If I zoom a bit, today's transaction was like a nothing burger. Okay, nothing happens. So that's the idea. Okay, so that was the point of NASDAQ. So I'm still in the position here and with the $82 down. That's fine. I don't care. Let's go. Yes, my friend, exactly the same, but we didn't have really a nice setup compared to NQ with this huge fair value gap here. I'm definitely not into ES right now. And as I told you, I don't expect to go down there. Okay, crude oil, let's go. Crude oil, I want this to be quite quick. So let's go. Crude oil, from the recent price action, we made a high, we retraced back into the range. We maybe swept a bit lower, but definitely made a new high after that. Okay, I said I don't take the weeks, something like that. Okay, perfect. We made a new high, and we don't seem to make a new low. So I have retraced back into the zone, and what I see here is a possible trade to take because I have an inversion here, okay, which is fulfilled around this zone, coming back into this massive green candle, okay, and here an inverse fair value gap. So I'm going to take live with you this trade, which involves getting long up at this specific level, and as I said, I'm reaching the highs, which is this level. So oil seems to be in an uptrend. I'm going to risk 0.5%. So how I do that? I do the thing live with you. So let's go. I said my balance was, I don't know if you see very well. I'm going to clear everything and start again. So this is my terminal on the left. I want to risk 500, which is 0.5% of my account. $500. My entry price, what would that be? So I'm going back to FTUK. I'm displaying the oil chart. I want the oil. Yes, the spot machin. Very good. So here we see the thing. That's fine. So price is around 7. Okay. Something around, let's say it's yeah, this one. So my stop loss price would be below the inversion fair value gap. So somewhere 69 here. So here it would be, yeah, 69.6. Stop loss price 69.6. Perfect. So I need to see what is the lot multiplier. So for that I go and I look at the instrument info. whenever I buy one lot, it's a multiplier of 100. Okay, so $1 move here is equal to $100 move in my position. Okay, that's important to keep in mind. So my multiplier here is 100. That's fine. So easy, because the volume is the risk divided by the difference between my two prices, entry price, sorry, minus stop loss price, and I divide all that by my multiplier. Okay, that's my volume. So at most, if I risk $500, I'm going with 5 lots. Okay, so what I'm doing here, and if I buy, I will just adjust that. You see that the spread here, I'm buying at 56. Yeah, okay, 6.59. That's exactly the same. I won't be regarding about that. So I'm just going to go long. I'm saying 5 lots of that, and I'm buying that. My protection order, I said my stop loss would be 69.6. As you see, my projected loss is like close to 500. Fine. And my take profit, good question, is the high here at 78.79. Is a nice nice ride. I send the order, I execute, I don't care, and I'm just getting filled here at or fill price 70.56. You see here, perfect. So here what we do, so I entered, compare here to the futures chart, somewhere here, my stop loss is here. I just enter the trade and see where it sends us. Okay, I just executed with you one of these trade. The risk to reward ratio is greater than 7, which could be a very nice trade here if oil continues to go up. Okay, so we'll track that after that. So that's why I told you in my X account this morning that oil might be an interesting instrument for today. So perfect. Let's go with gold. I continue. So gold was completely crazy. A lot of things going on with silver, also massive run up. So just to show you what my strategy is about on silver. So what do we see? We trace back into the zone, but we don't hit here the 50% mark. We don't go into the deep fair value gap that's there. Obviously, I want one day to see silver going back there, but you can see here that there was a massive inverse fair value gap. And one trade idea would have been to enter when we clear this fair value gap, stop somewhere below the inversion fair value gap and reaching for the highs. Okay, that was a 4-hour trade. That would have been a win. Okay, that's an example. Okay, I don't care about that because now I see just this massive way up, and the reason why I don't consider this is because we didn't went into a discount level. So when a trend is going up, you have below the 50% retracement what is called discount. This is where you want to go long in an uptrend. And above its premium, it's where you want to short. Okay, so yes, my strategy is the same for all the assets. Yeah, clearly, because I want something generic. I believe as yeah, that's something I didn't recall during this stream, but I'm only working, as you see here in my list, with futures chart. Okay, because I believe they are more accurate. All exchanges happening into futures exchanges are centralized, contrary to forex trading. When you trade with CFDs, you can have multiple CFDs. That's what I'm saying there. You have multiple CFDs for one pair, but one unique future underlying. Okay, I absolutely don't want to be fucked about the difference in price between all of these brokers. I only rely on the most of the time the CME exchange. Okay, that's the Chicago Mercantile Exchange for futures. But I really do execute my trades on CFDs. That was a quick reminder. So what I see here, silver futures going absolutely nuts. That's fine. We are going really up. So what I'm doing here? Well, nothing. We are clearly into uncharted territories. When I'm updating here the previous range of the high, that's a all-time high on gold. Maybe we'll go down, maybe not. When I see this huge massive candle here down, might be a correction, but I'm definitely not risking any capital here just to expect go lower into this massive uptrend. Okay, so here I'm just waiting. So I'm adding some text. Wait, I already did. I'm just waiting, nothing, and I'm definitely not into shorting this setup. I don't know what the fuck is happening on gold and silver futures. I'm not doing anything, but what I'm expecting is maybe a comeback into this zone before going higher. Okay, that's the main idea. So we definitely made a new high here. So that's the idea. So gold and silver is quite the same here. I'm not going into the details. Here, dollar index futures. Really interesting here because I'm going to zoom out a bit. I don't know why there are so many things there. So again, in the 4-hour time frame, the last downtrend. Yeah, but why don't you take the downtrend sees the high which was there? Because when I'm taking this to the low here, I can see that price afterwards came into this zone. So price already retraces back. So this is the lower high in my downtrend. So this high is clear for me. The next range I'm taking into account is from this high to the very next low. So let's do that again. I'm taking the dollar index and I'm going down, down, down to this low. Here I see I don't retrace into the next trend here. I don't retrace back into my zone. So I don't care and I'm continue making the zone bigger and bigger. Again, we can see that this going up doesn't retrace back here, so I don't care. Let's continue, etc., etc. Okay, so this leads us somewhere here. So this would have been a nice idea. I make definitely a wonderful new low, waiting for a break of structure or enough of an inversion, I would say, setup. After taking this low over there, somewhere here, I'm expecting to go long. So this would have been a trade idea if I had started my challenge a bit earlier. So up to the low and targeting my 60% retracement level, 61%, which is there. 3.5 or reach into some days. So what was the time here? Date range. We started the position here. Okay, do you have the balls to keep this trade open for 16 days? That's exactly what my strategy is about. I don't mind about holding my trades a very long time. Okay, that's the core of my strategy. So this didn't happen because I'm not here, but I'm definitely interested into this zone because, as I said, this is where I want to see the price rebound before getting even lower. And I see this massive fair value gap here, and that's why my Australian trade was a mistake. That's because I didn't wait the dollar index to go down. So you may know what the dollar index is about. It's just a mix of different currencies. Maybe I can find you that dollar index composition. But most of it is based on euro. Okay. What is the US dollar and its weight? Let's take Wikipedia. So most of the weight into the US dollar index is the euro. Then we have the biggest currencies here with the Japanese yen, the pound sterling, and the Canadian dollar. So for me, it makes no sense to enter a trade in one direction on the Canadian dollar when I know that the US dollar index is still not into a reversal point. Okay, to make it clear, I'm waiting this dollar index to bounce back before entering any long here in EURUSD, GBP USD, Australian USD, Canadian USD, etc. Okay, I just made a mistake. I was talking about Australian dollar. It is not here. Okay, but that's exactly the same idea. Okay, I'm not getting long into any of these when I don't see a bearish reversal. Yeah, I think you understand my point. So here we're entering in a fine zone here. I want definitely to see a reversal. So, okay, I'm just clearing a bit all of this. So this is my massive previous fair value gap. I want to see, as I said, a reversal on DEX. If I get somehow a reversal here, okay, maybe tomorrow, I don't know, I'm definitely shorting the US dollar index. How I do that? I do that longing each of these pair. Okay. So what happens with euro? Euro is doing quite crazy shit here. Okay, what's happening? Okay. This was my previous low, the high. We didn't make really a new high, but still it's considered a new high. And we are getting really deep down into the previous, previous high here, okay, deep into this fair value gap. So here there is no way I'm entering long that until my dollar index reverses. Okay, that's clearly my opinion about that. But I'm definitely long on this because even if it doesn't have a nice pattern here, DIX tells everything. If you go back in time and you see what DIX is about, it has started a downtrend since October 23. Down, back up into the zone. I'm marking that for you. Okay, went a bit up. Doesn't matter. There were some nice fair value gaps over there. We go down, and then we go down. We mark a new low. We come back, and what I expect, as you may have understood, is this thing. So that's definitely what I'm trading maybe this week. Okay. So I see DIX coming over there. Let's see what happens. So we saw euro is really deep into the discount zone. Some may think that we are going to this low. Maybe, maybe not. I don't know. I will wait to have my confirmation with DIX. I would have really liked to sweep here this low and directly here have an inverse fair value gap at this level. This would have been a really good setup for me to enter long on euro. I'm talking about this one. I don't know if I can make that more clear. Yeah, I would have definitely entered here. Just hope and all that. Yeah. Okay. So why didn't I enter this trade? I see a massive candle down. We go really deep into the zone. Nice fair value gap. Why didn't I enter that? Up and targeting a new high. Definitely targeting a new high on euro because I'm targeting the next low on DIX. I didn't do that because dollar index wasn't ready and haven't performed an inversion pattern. Okay, so that's my view, and this would have been a loss. Okay, so absolutely no regrets about that. If I take the DIX candles, this on euro was corresponding to this specific candle here. I'm switching the color. I'm switching the color to make it more obvious for you. Yeah, let's do. Didn't take that, so it was no red. It's already taken. Let's take some blue. Okay, this was the massive candle. Euro went down. I see. I don't have any significant inverse fair value gap. I didn't make a new low. This is definitely not a good setup to hope US dollar will go down. So what do we see? We had a little liquidity sweep here, and we immediately went up to a new high. Okay, bursting everyone here going immediately short on DIX. Fine. So let's continue. So I told you I took a loss here. That's fine. We are not in the best zone here. I don't want to enter this instrument when DIX reverses. How is this one? This one also is a bit deep for me into the premium zone. Again, I took, sorry, the low and the high. Here is my zone. Nice fair value gap. We a bit bounced here, but we didn't manage to make a significant new high, and we immediately went down. Not nice at all. My Japanese friends, how are you? So note that here the Japanese yen futures are just the inverse of what we are used to see as USD Japanese yen. Okay, we are not at 150 as we see usually USD JPY, but we are in 0.0 thing because it's just the inverse here. Okay, so if I check the retracement here, we still didn't get to this specific level. There is no way I'm considering doing anything on this yet. Swiss franc, we went into the zone. Okay, nice fair value gap here, but didn't got inversed. Okay, at this level. So I'm definitely not taking this. We are still waiting. New Zealand dollar. Okay, we went back, we went down. again, entering the zone, just to show you how I designed this. So I said I'm not taking the wicks. This is the exact range. High, perfect. Let's go back into the zone. If I reverse anything here and that I have my friend dollar index that is inversing, this would be a nice trade. Okay, into a discount zone here, going long till the highs. This could be a nice trade, because why not? Okay, and I'm not going to go through Mexican because why not? No, there is no real trend here. We go up, down, we take the low, go to the low, you take the high, you take the low. Sideways trading, I don't like that at all. I'm not touching this. And yeah, Euro-British futures, not really big fan of this instrument, so I will pass that. Bitcoin, everyone is going fucking crazy on Bitcoin right now. Yeah, it's going to infinity because we have Elon Musk and Donald Trump maybe getting into the White House. Would be a real change at anything. I don't care. I'm not trading my beliefs about Bitcoin. I'm just trading the charts. So what did we do here on Bitcoin? So Bitcoin made a new low, retraced back somewhere into a fair value gap, quite deep into the discount zone for shorts, entering here. Okay, break of structure, whatever you want, you select that where you want. Massive down candle, we reach for a new low and we made a new low. Fine. But here, when we retrace back, we effectively go into the zone, the Fibonacci retracement zone, but we fail to make a new low here. So this kind of temporary stops the way I'm my downtrend for now. And what we can see is happening is that up, I'm at the point where I'm drawing both the uptrend, and I keep in mind the downtrend also of this one, because we reached that, but we are still into the discount zone for shorts with this massive fair value gap. So everyone telling, yeah, we are going to do a new ATH, new all-time highs on Bitcoin. Maybe, maybe not. I don't know. Nobody knows. But what I see here, which is quite extraordinary, is a reaction to this fair value gap and a massive way down here. Okay. So I have a comment. After testing many mechanical strategies, you have finally become a discretionary trader. Yeah, no. Yes, because I mostly tried, let's say, mechanical strategies for dummies, like day trading strategies, like Judas Swing, like Silver Bullet, etc. But reality is that with what I tested, there is no mechanical way to make it work on the long run, because also because I'm limited by my own technology. The concepts like sweeping liquidity level or entering a fair value gap and not breaking it, it's quite, I would say, difficult to implement. So I believe I could enhance my system to become more intelligent, where it would require more work. I believe my strategy on the long run will be more mechanical, but I still struggle trying to translate that into mechanical strategy. But definitely trying to apply, as I said, this kind of patterns. I believe one day I'll be able to translate that that intelligence into yeah, let's say computer, but maybe it will take me more time. It was just a precision about that. So what's happening here? Bitcoin, I'm seeing the opportunity that a nice reaction to this level. We broke the structure here. I want to see what we do here, but I'm definitely considering, okay, now I know I touched that. I'm definitely considering shorting Bitcoin. And again, because I'm shorting something that might be in an uptrend, I'm targeting the low here, the next obvious liquidity level at the 61% here retracement level. So this could be maybe a 3 reward to risk ratio. So that's that could be a trade idea, but I don't want here to get any inversion on what. So something that I see a lot but never thought about is taking a trade late is better than trying to anticipate it and take it early. So now I never will say anticipate, I would say blindly a fair value gap. So that's quite new for me because I had to learn patience, as every trader needs. But there, I'm definitely not seeing this as still a short entry. And even if it's a short entry, I will only, if I enter that, risk. So for now, I'll wait. And if short entry, I'm going to risk 25%, 25 points. So don't blindly enter fair value gap just because someone told you or just because it feels nice. Cool. So I think I'm finished with my list. I tried to make that shorter, but I didn't really manage to. Now, like 42 minutes in it. I hope by the end of the week, I'm focusing more on my strategy to present it more deeply, so I don't lose time next time, and I'm just go really quick onto each symbol. I take the trade, and that's all. Thank you, goodbye, and everything is done in 20 minutes. That's my objective in the long term, to get to be able to spend at most 15 minutes per day in my trading. So I will definitely, I don't know if I'm live tomorrow or the next day, but I will definitely keep you updated and post on X if I enter anything in the forex symbols. And my journey will be really transparent. I want to be yeah, clear about that. So thank you, all in one, Story Capital. That's really nice for you to get in. I'm trying to share that with you, and maybe so someday I will just pass this massive challenge of a 2 million funded account. Have a nice night, everyone. It's really late here in France, and see you next time. Thank you.